Okay, so I'm going to start. Hello and welcome to Cky Lense Performance Review and Future Plans. Our team consists of myself, who is mainly responsible for marketing, Runesia, who takes care of the managing part of the company, and finally, Purana, who keeps an overview over our company's finance. Okay,
Take your time. It could just be
I'm going to
slow,
go real quick
so
over
don't
the
worry.
agenda of our today's presentation. So shortly, I'm going to hand over to Renetia, who's going to start us with some charts of the several company trends, as well as some of our future performance targets. I'm going to get word back then and talk about our company's vision and the strategy we have pursued over the last couple of years, generally, as well as divided by our products. After this, Renetia is going to walk us through our production strategies, followed by Purana, who will tell us more about the financial position and strategy of Cky Lense, as well as our standing in relation to our competition. Finally, I will share our thoughts and plans of how we want to improve in the future. And lastly, we are just going to talk a little bit what lessons we learned throughout the semester and especially like throughout the simulation. So I'm going to hand over now to Renetia, who is going to talk about the trends of our company so far.
All right. How are you all today? I would like to speak about
Purana, you're muted. Renetia, you're muted.
Hello.
No, I can hear you. I can hear you just fine.
Oh, okay. Okay, good. Okay. Okay. All right. So I would like to let everyone take a look into the business. Since taking over the business in year 5, we have made substantial increases in all of our areas that the investors in all of our investor expectations. So first, I would like to take a look at our earnings per share. Since taking over the business, we had a very small earnings per share. And so that challenged our group to strategize to get that to steadily increase our earnings per share. So if you can look from year 5, we were at a low of 75 cents. And now we're at a high of $15.50. If you take a look at the graph, that you will see that it is a increasing slope on the graph. So that is a good indicator for us that we are making strides in increasing our earnings per share, which will make our investors happy. Next slide. All right, so this is our annual revenues. We have 2 products. We have the AC camera and we have the UAV drone. If you take a look at our net revenues, if we compare the first group of numbers, you will see that the total was slightly above 334,000 revenue. And you will see that over in year 14, we exceeded over $1 million. That is tripling our revenues from starting the company. And I'm very happy with our numbers. If you take a look here at the graph, you'll see that our revenues have been slowly increasing as years have progressed. Next slide. Back one. Oops. We're missing ROE, return on equity. There we are. All right, so if you take a look here at our return on equity, you will notice that first taking over the business, our return on equity was a low of 14%. Each year we try to meet or exceed our investors' expectations of increasing of about 20% each year. So if you can take a look here, that you will see that there has been an increasing amount each year that we have gained with our return on equity. We achieve those goals of our return on equity by increasing our prices and also increasing our market share. So with those two combined, that has led us to have a higher return on equity. Next slide. Credit rating. Go back to credit rating. All right, credit rating. All right, so if you take a look at our credit rating since beginning the business, it was at a B. But where we are now, we are sitting at an A+. That is excellent for us. We have continued to strategize to ensure that we maintain a high credit rating. We have experienced many costs since running our company. And having a high credit rating will ensure that we are able to take advantage of opportunities that can help enhance our facilities, that can help next slide. Performance targets for our year-end stock price. So if you take a look at our stock price at year 5, you will see that it was $12. And we have increased our stock price to $456.62. That is magnificent for us. So that means that our shareholders and our stakeholders are able to benefit from the increasing stock price. We have been able to issue out dividends during our time since running the company. So that is a clear indicator of how well the business is doing and how we want to give something back and show that share with our stakeholders and our shareholders that we really value their part in our business. Next slide. All right, so for our projected performance targets for year 15 and year 16, our primary components of strategy focus on research and development to create innovative products that meet the needs of our target market, marketing and advertising to create brand awareness and drive sales, and supply chain management to ensure a timely delivery of products, and customer service to provide support and build customer loyalty. So if you take a look here at our charts here, you will see that in year 15, we are expected to have our earnings per share at $16.36. That is exceeding our investor expectations. Our return on equity is 50.8%. So that is also exceeding our investors' expectation. Our credit rating is at A+. That's also exceeding our investor expectation. But we have fell short of our image rating. We have thought about that closely and how we can improve our image rating. We have decided to bring back our facilities. We are actually going to add a cafeteria and on-site childcare to increase our image rating amongst our employees. And we are also going to give out sizable charitable donations to also increase our image rating. So we are projected within year 16 to meet or exceed the image rating. It does take a little bit away from our ending cash by investing in that, but we do feel like that is a sizable sacrifice that we can make for a business to be able to meet those expectations. If you see, take a look at year 16, we are projected that our earnings per share will increase to $18.32. Our return on equity will be 53%. It's 53%. Our credit rating, A plus, and image rating at 75%. That does not factor in the sizable charitable donations, but with adding a sizable charitable donation, we will be able to exceed that image rating. Next slide. And I would like to hand that over to Carrie. She's going to talk about the strategic vision for our company.
So do you hear me? Do you guys hear me now? Okay. Short and sweet, we want to empower explorers and enable budget with a best cost approach. We aim to create a market position that combines affordability with superior functionality and durability. Our goal is to make action cameras and drones accessible to a broader customer base. Through this approach, we capture significant market share, build brand loyalty, and established ourselves as one of the go-to brand for adventure enthusiasts that seek reliable and cost-effective technology. Okay, wait, I skipped the page. Okay, so I'm going to talk now about our competitive strategy in general for the whole company. All over Cky Lense follows a best cost provider approach. This aligns with our company's commitment to deliver high quality products at competitive price points and cater the preferences of global customers. We do this for both our products and also apply the strategy consistently across all geographical areas where we operate. We prioritize our approach based on the demand in each geographical area. This was for drone as well as for cameras the same. Our priority order is as follows: North America with the highest demand in the biggest market, followed by Europe, Africa, Asia Pacific, and Latin America with the lowest demand. I'm going to now divide our strategy a little bit by product and tell you guys a little more about what strategy we followed for each product. Starting with our AC camera. So we provide a competitive pricing. So our company aims to maintain a competitive edge within the wearable camera market by strategically positioning our products below the industry average. Unfortunately, the graph doesn't indicate the industry average, but we can observe here that we gradually increased our PQ as well as our price over time to keep up with the developing market. So here we want to spend attention on the blue graph, who shows us the price of the camera, and the PQ rating. We also boosted robust sales promotion to enhance customer engagement and drive sales. We consistently implemented a range of compelling sales promotions distinguished by higher percentage discounts and increased number of weeks than competitors. We also annually competed for the special contract offer. So far, we were able to score multiple times in different geographical areas a special contract offer, which each time increased our sales by 10%. Moving on to the UAV drone strategy. We focused on innovation. We increased our PQ score consistently, as you can see here on the graphic. We invested in research and development to introduce new technologies, such as improved image sensors and enhanced image quality. And so you can see we started in year 5 with a PQ score from 4.0 and ended in year 15 with a PQ score of 6.6. So we really improved our quality and accordingly also adjusted our price. You could see here we actually had a a really big dip in market share, which looks scary at first, but due to the higher price we had a better profit margin and still increased our revenue. We also focused on having a diverse camera model portfolio. We not only value quality, but also diversity. Our company boasts an extensive selection, surpassing the number of models of 2 out of 3 our key competitors. We did this increase in year 11, and we could really see with other changes we did how it increased our revenue specifically for the drones. We also focused more on direct online sales. Our sales were consistently higher in direct online sales rather than over third parties. For this reason, we supported this by putting more money in developing our company's website. And passing on to Rana. Sorry, skipped a couple pages. There you go.
It's not the slide. Oh, sorry. Ranisha, go ahead.
Okay, this is my part, right? Okay. Production strategy. To meet the needs of our customers, we plan to pay close attention to our supply management chain of activities. We will advance the knowledge and capabilities of our managers with advanced strategy tactics when negotiating lower price of components. We want to be the best best cost provider strategy. With that being so, that means that we want to offer high quality products for the best price. So that means that we have to have good negotiating skills when it comes to speaking with our suppliers. So through our research and development, we plan to continue to scrutinize our suppliers that manufacture our AC camera and drone operations through advanced technology systems that will help minimize errors. That is very important because we offer a higher warranty and discount period for our customers. So being able to eliminate errors will be very beneficial for our company, and also being able to uphold those warranty periods for our customers. We want to further improve our PAT assembly processes. We want to improve that. We have improved it with robotics, but we do feel that we can continue to closely monitor our PAT assembly process with the use of technology and systems so that we can continue to improve the hours that our PAT members are working. To maximize company hours, we plan to execute our yearly plans without the use of overtime. It is very helpful that we have the ability to project to be able to plan for overtime. And any time that we run into overtime, our strategy is to employ new workstations. And that leads us into the next slide. Projected assembly. So if you take a look here at our projected assembly, you will see that our assembly capability versus our demand, you will see that we have the capability to exceed our projected demand in year 15. You will see that we do have a balance of about 100 more units that can be produced within our facilities. And you will also take a look at that same is also projected in our UAV drone facility as well, that we have the ability to produce more without having to upgrade our workstations or workspaces. However, in year 16, we are projected to need to upgrade our facilities to provide for additional workspaces due to the projected demand. We are planning to have more of a demand of our camera and drone products due to our higher PQ. So that helps, that allows us to compete with our rivals and be able to sort of gain some of those customers due to our lower prices, but also offering great features. Next slide. Facilities management. Facilities management is a very key component to our business. We want to keep our costs low. So really managing our facilities is very important. As I mentioned, for the current year, we are not using any overtime. Overtime comes out with an added cost. So to keep our costs low, we think that it is a better option to expand our facilities versus the use of overtime. Overtime, it comes at a higher cost. So we have evaluated the cost and have decided that upgrading our facilities is the best option for us. So like I mentioned, in year 15, we are going to keep our current workstations. And then in year 16, we will plan to add 2 additional workspaces so that we can be able to support the projected demand and the projected demand in upcoming years. Next slide. All right, so projected performance for workforce compensation. So in an effort to increase our image rating, because that is something that our company has failed at over the last year. So we plan to combat that by deploying a higher salary per employee and an assembly incentive for year 15 and 16. In past years, we have always beat industry average by far, but due to compensating our employees well, we were taking a larger hit when it came to other aspects of the business. So through careful evaluation, we decided that it would be best to take some of those funds and invest it into our employees so that we can make sure that they are happy. So we are actually going to ensure that our employees are safe at work by making sure that we have advanced safety features. We also will supply our employees with cafeterias and childcare for the employees. And we are also going to do advanced lighting in our facilities. With the efforts in these particular areas, it will increase our PQ rating to about a 77%. That is still not meeting our investor expectations, but we do think that in year 16, with our increase in charitable donations, or anywhere between 6,000 and 9,000, that will be able to help push us over the 80 image rating. Next slide. And I'm going to go ahead and hand it over to Purana so she can talk about financial strategy.
Yes, thank you. I want to start off with our financial strategy. Our company has a balanced finance strategy, and we prioritize returning value to our shareholders through dividend payments and occasional stock repurchases. And the increasing total shareholder equity over the years indicates that we have a healthy financial position. And the high return on equity in year 14 suggests that we have an effective use of shareholder funds with the debit equity ratio of 18:82. We have a conservative approach to debt, and our good credit rating over the years reflects on our strong financial strategy. Like Ronisha said, before we took over the company, we had a big credit rating, but as of now, we have an A+, which is really good. The operating profits margin and net profit also indicates that our company have effective cost management and profitability. The dividend payout ratio also shows that we have a commitment to rewarding shareholders, and our company's overall finance strategy aims to maintain a financial strength and generate profit and also provide returns to shareholders. Next slide. So as of the last 2 years of the simulation, Digital Views has a higher market share, higher camera sales, PQ rating, and that's why we consider Digital Views to be our closest competitor. This company has a formidable competitor, is a formidable competitor in the industry, and because they have also managed to establish a foothold and are likely to attract customers with their superior products and the reputation they have managed to build in the last 2 years of the simulation. Yes, next slide. This also goes with the UAV drone segment, also goes the same with the AC camera. Digital Views, with their higher market share and impressive sales and a strong brand reputation, with also the exceptional PQ rating, they have established themselves as a powerful force in both AC and camera segment. Sorry, in both AC and UAV drone segment. For the last, they have managed to establish themselves also as a competitor in the UAV drone segment, making them a strong competitor in the industry. As you can see on the graphic, Digital Views ranked first in the industry in the year 14, not only that, but also in the previous year, which is why we consider them our closest competitor. And this is something they were not able to do in the previous years of the simulation. And I would like to hand over to Carrie.
It's not my slide. Is it Renatia's turn? I think it's Renatia's. Sorry.
Okay, yes.
Sorry.
How we plan to outcompete our rivals. So we plan to outcompete our rivals by closely monitoring our information systems. So that means customer data, any our points of connection with our customers. We plan to evaluate that data so that we can be able to advance our products. Also, our operations data. So that is going to be key because we want to make sure that we are being very efficient in our operations. We want to make sure that there aren't any errors in our operation processes so that we can be able to ensure high quality products and be able to maintain our low cost component of our business. Also, we want to closely monitor our employees. That means monitoring the benefits that we are giving our employees, also in regard to their salary, quality incentives, training purposes. We want to closely monitor that data so that we can stay within line of stay within a low margin. Also, our supplier and partners in our collaborative efforts, we just want to be able to take advantage of any type of opportunities that might lie within those relationships. And we also want to monitor our financial performance data. Everything that we collect does affect our finances. And with our finances, we want to ensure that we remain low so that our costs remain low so that we can be able to offer a high quality product that will suit the needs of our customers. And with our information systems, they will all be tracked in real time.